The initial problem is they have to justify their lending capacity to ASIC and APRA by saying, well, if you're giving them a 30-year loan, do they have the capacity to repay that loan? And if they don't, what are you doing about it? Or should you be giving them a loan in that case? And so we have to find a way to present your story to the lender in a way that makes it easy for them to say yes, because they have an excuse to give you the money and they want to lend to you. Don't be mistaken. But some lenders are much easier than others in terms of age-related policy. But there are lots of things you can do to make yourself more appealing.
You're listening to the She Renovates podcast. You're listening to She Renovates, the podcast for women who want to renovate to create an income and a life they love.
Welcome, everyone. So today we're having an episode around a question or a comment that was made in one of our Facebook posts about how difficult it is to get money when you are approaching or at retirement. Now, I've asked Louise to join me because Louise is our legendary Wonder Woman broker.
Oh, you are so kind.
Yeah.
We love working with Wonder Women.
Yeah. And Louise has a business called the Property Education Company, and she also works at the other end of the spectrum. This is not relevant for today, but I think it's worth mentioning that Louise helps first home buyers as well get into the market with finance. So she's sources finance for people. And because she has a very extensive background working in the big four banks, she really knows how to ruffle their feathers, is that the right word? And get them, delivering. So I've asked Louise to come in today because this is a conversation that we have had time and time again. And I think this will make a difference to some people in our community that are concerned that because of their age, they're not able to get finance. So welcome, Louise.
Thank you, Bernadette. I'm thrilled to be here. I love being with you guys. So girls,
Awesome.
I should say.
Yeah. And the odd guy.
And the odd wonder guy. We like them too.
Yeah. So the thing is, Louise, you and I, firstly, can you explain why banks are so concerned about people who are over 50, let's say? What's the concern and what do we need to be aware of?
So the initial problem is they have to justify your lending capacity to ASIC and APRA, the government bodies that manage lending in this country, by saying, well, does that person have, if you're giving them a 30-year loan, do they have the capacity to repay that loan? And if they don't, what are you doing about it? Or should you be giving them a loan in that case? And so we have to find a way to present your story to the lender in a way that makes it easy for them to say yes, because they have an excuse to give you the money and they want to lend to you. Don't be mistaken. But some lenders are much easier than others in terms of age-related policy. And you do have to know your knitting, basically, in this area, who is more amenable to others. But there are lots of things you can do to make yourself more appealing. And my problem is, I think what really stops people, Bernadette, and you and I know, is fear. They're worried about, I'll be caught and I can't do this and the property might not make money and blah, blah, blah. So it's the bank's fault. I didn't get the money. But it might not be. It might be the way you're going about it. So I think what we can do is look at all the ways you can get cash in this day and age. And there are many, many ways. And it's a cost of doing business. Do I need to borrow, pay a bit extra, get the deal done? Or am I going to sit on my laurels and be fearful and not borrow?
Because the thing is, once you sort of get over that first hurdle, then it becomes it's like you're pushing out your comfort zone. Once you do it once, and then all of a sudden, all these other opportunities open up to you. So it's absolutely worth committing to, isn't it?
Yeah, I totally agree. In fact, I was lucky in that one thing my father was very encouraging all my life was women should be able to borrow as much as men. Well, back when I started borrowing, and you, Bernie, back in the 80s, they didn't even consider your income. Like, oh, don't worry, you'll be off and pregnant soon. Well, that didn't happen actually. And then now they're like, oh my God, you have to, if you've got a partner, there's two of you that needs to be committed to that loan, and we need both of you. So things have really changed dramatically. But my father was always very adamant about women being able to borrow and how you go about it, and not be fearful of debt, because what are they going to do in the end? How they're going to get you is what you got to think. So what's your exit? Yes, we want to have an exit strategy, but we're not going to be stupid about it, but we are going to really focus on, well, what are we trying to achieve? I'm not going to just sit here and let them say no to me. I'm going to keep trying, There's a lot of things you can do.
So how we go about this? We talk about different types of projects, or
about scenarios. Absolutely. Well, one of the things I just wanted to bring up, KPMG have just released their latest report saying, the young ones today are going to have to work till 70, but a lot of people are working till 70 now. And there's nothing really to stop you. If you're fitting well, which is the main thing, why would you want to cut out early if you're having fun and doing, fun renovating and making money and enjoying yourself and contributing, helping people get into good housing? Well, why wouldn't you want to do it? So, let's not let age, and the banks have a sort of, the cutoff at the moment is 67, or some banks will go to 70 as your age limit. But if the difference is that is for owner occupied as well. If you are borrowing for investment, then you're treated completely differently. So to say that I can't borrow because it's for investment, but the main problem is how you're presenting yourself and your income. The banks are there ready.
Absolutely. Okay, so one of the strategies that I think is probably the most powerful strategy around, and that is renovating your way out of your mortgage. There's a few ways of doing that, but one of the ways is by climbing the property ladder. So, or, climbing up and down. So let's say, if you're someone that's younger, that you might buy a property that you can afford, not necessarily the one you want, and get the mortgage for that and then renovate it. So a well-structured cosmetic plus renovation should be able to deliver around 20 to 25% profit after you've paid all your costs, okay? So let's say, you're buying a property for $1 million. I used to like to say that because I thought hardly anyone would be in that category, but now it's just about everyone.
But actually, in Sydney it is, but outside lots of people are buying elsewhere for a lot less. The average people are buying a lot less. So do not get put off on that,
Okay. So let's say $500,000, 20% of that is 100,000. $1 million, it's 200,000. And because it's your PPOR, as long as you manage that status well, aren't too gung-ho and have that ATO on your back, that's a pretty good uplift each time you go up or down a rung. So, but let's say you've got to, say, 60, and you the house that you've got at 60, you want to add that 20% value to, but you now can't get the loan. How could you do that?
Okay, well, if you're working, obviously that helps. If you're not working, you've got to think about the criteria for lending, the five characters, traits. Would you lend to yourself? And it amazes me that people present themselves with no income, no strategy. I just want to borrow money because I think I'd like to renovate. Well, come on, get serious. I wouldn't lend to you. Would you lend to you? You probably wouldn't. And if someone came to you in the same position, you probably wouldn't lend to them either. So what can you do to present yourself as a suitable person to lend to? So I think having an ABN and starting a business is one of the key ways. Are you going to take this seriously and do it for profit, but create an income? Because often you can borrow now with low doc loans And all you're declaring is, well, I intend to make that 200 grand this year out of that, which is a perfectly acceptable income. And your accountant has to verify that you will make the repayments on the loan, not even verifying your income, but verifying that you'll make the repayments. If you don't have a history of doing that, well, you're in a bit of trouble. But that's one way of doing it. You can go a low doc loan, to self-declare your income, and your accountants backs you up with, well, yes, Louise and Bernadette can make the repayments on that loan, and that's all they have to verify. That's one way to do it. And so don't get to
that would be more doing a project to make money. Would you do that if you were doing a reno on your own home?
It's if you can run your business, technically business or side business, separate to you're not doing it as your home. This is just to assist the borrowing.
Yeah. Awesome.
This is not for running a project. This is just to assist getting a loan. So don't leave your job at 60 and then go, oh, they won't lend to me, or I've reduced to 2 days a week. And funnily enough, no one's going to lend me. That happens a lot. Oh, I just want to renovate. Well, how about you stay employed full time, get the loan, then go renovate, then get some runs on the board, start making the money. Sorry, the sun has finally come out in beautiful Melbourne.
I know, it looks beautiful.
Finally, it's been like miserable as hell all day. But anyway, so that's one way. Another way is if you're actually retired and you have equity in your home and no loan, preferably.
Well, can I just say this conversation assumes that you have equity in your home.
Yeah. Okay, good. Well, yes, you'd hope so. So one of the things you could do if you're fully retired, and you can do a reverse mortgage over 60 and borrow, up to 15%, 20%, depending on your age, to borrow out of your home, your property, and then use the cash to renovate, which is a perfectly acceptable strategy. Then downsize again, renovate again, use the same money, and you keep accumulating cash this way. So I often find that's a really easy way. If you've got a bigger property, but people go, oh, but I don't want to move. Well, you can't have everything. Think about, what are you trying to achieve? Do you want the money, or do you want to live in some,
Yeah, I always say, you have to think about what life will be like if you are on a pension and having to pay mortgage repayments or rent. It's just not a life, it's poverty.
Yep.
So if that's the alternative, it's very inspiring. But the other thing is, once you get into it, I know I'm a little bit biased, but once you get into it, renovating is just such an inspiring way to spend your time and creative. And so I don't really think it's a compromise.
No, I think it's enriches your life. For one, the people you meet, this community is awesome. Just saying, we love all of them. And they are such a supportive bunch, and you get great ideas from them. I love that. When I put something up, how the hell do I fix this? And they tell you. I love that. So there's lots to recommend about it, doing the actual work in renovating. And when you think you know enough, you never do. There's always more to learn. It's one of those great things to do in life. But anyway, and not everyone can do it too.
Absolutely. Yeah. Yeah, you definitely have to be committed to, I know it looks easy on telly, when they're doing it on the block, but it requires a commitment and a willingness to learn the skills. I think that's probably the key things. And when we talk about skills, we're not talking about painting and decorating or laying tiles. We're talking about due diligence, feasibility, managing trade.
Not spending too much, not having weird ideas, oh God.
Yeah. Weird ideas are okay in your own place. If you want to do something in your own place and you're not ever going to sell it, that's fine. But otherwise, you're renovating for a market. So let's go back to the reverse mortgage. I just want to get some details. And I know this, should mention this is not personal advice. It's general in nature. Yeah. And, but we're just really wanting to give you some places to look. So you can generally borrow about 15% of the value of the property.
Well, it depends on your age and your circumstances, actually, and it's from the youngest member in the household. So whoever's the youngest person, So
let's say on a 500K home, 15%, is about 65,000, is that? Or 75,000, which is like, seriously, it's a decent amount of money. And how cool would it be if you were to do that and eliminate your mortgage in one or two projects? So, yeah. What are the other?
Well, no, more than that. If you then borrowed that money on your property, renovated it, sold for, say, 150 more, hopefully, cleared, you can roll the mortgage onto the next property with any luck, and then buy something cheaper and do it again. Then you keep accumulating cash. Well, and that can go into super if you wanted and keep, the mortgage happening. It really won't matter.
That's
because
right.
You don't have to pay reverse mortgages off.
Yeah, but are you accruing interest as you go?
You are, and the interest.
So can you offset while you're in the meantime?
Yes, you can. Yes,
great.
It's possible to actually. Some of those loans are set up so that you can pay the money back in and then just draw down what you need when you need it. So that's really cool.
Are there interest rates horrendously high
for reverse mortgages? Yeah, they can be. They're usually at the moment high 8s, early 9s. Whereas, yeah. So again, it's a cost of doing business. A low doc loan you can actually get in the early 7s. So that's. And the standard variable mortgage at the moment with an offset or a package is probably early 6s.
Okay.
So, yeah.
And so you're talking about, but the thing is, it is a numbers game, and it's about being, if you can hold that in the offset so it's only coming out when you use it. So if you're really polishing your renovation skills and managing the budget really expertly, then you so you're right, it is just a means of doing business. And to be honest with you, if you have to go to private lending, you can be paying like anything up to 20%. So from that point of view, I don't really see it as really being that high.
So I don't think so either. And for a means to an end, and the saddest thing I've found, Bernadette, is finding people coming with a mortgage in their late 70s or 80s. They're starting to get sick and they cannot manage a mortgage. Their credit cards are maxed out. Their life is just a complete stress around money. And what a horrible way to live. And instead, we can actually get rid of that, put them into a reverse mortgage and take all that pain away. It's a great relief for people.
That's awesome.
I've helped quite a few people do that. I used to think, oh, geez, these reverse mortgages, is this a bit dodgy for people? But actually, everyone I've put into it has been really grateful and they've been thrilled, And look, how much better to have the money to spend with your children instead of giving it to them later when you're gone. How much better to spend the money helping them do their renos or helping them buy their property by using your cash if you can, and spending time going out to dinner with them and spending time on holidays with them than actually worrying about, I've got to pay the rate so I can't go anywhere or do anything, but I'm sitting in a $2 million property. It's insane.
It absolutely is.
So there's lots of options. I think people should not say no. You should try a bit harder. There are ways, but it's often, I get back to it's the fear factor that stops people doing stuff. And if you've got support in the right community, you can really do a lot. And here's one of our mutual clients, this week has bought 2 properties, settled one and bought another one to renovate, just going for it, using her job as but using the actual process to get ahead. So that's good.
Okay, so I want to just jump back to the renovating as a business. And so
I was talking about, that was 2 separate things. One was
I know.
So just so that's really clear for everyone.
So if, let's say you want to renovate and you want to renovate instead of your job, basically, and you're wondering how you're going to get the finance when you haven't got an income. So what you do is you do your projects. And do you necessarily need to have that money going into a legal structure? Can you do it as a sole Like, not that you probably would. You wouldn't do it as a sole trader, actually, because you'll pay too much tax. No, it has to go into a company and then you get paid a wage out of the company. Is that how it works?
It could, or we can accept company profits. That's no problem.
Okay.
It doesn't have to be, it can be dividends, company profits, as long as you own the company and it's yours, not shared.
Yeah.
Income goes to you, so no problem.
So what's the time frame you need on that for serviceability? I know you say not all banks do it, but what would be an acceptable time frame?
So if you've actually in the process and you're running a company doing renovating, we look at, for a standard mainstream lender, they want 2 years financials.
Okay. Are there any non-mainstream ones that need less?
Yes, we can actually do it on 12 months ABN, and self-declared income is automatic. You can do it, pretty quickly. So I would suggest, if you're intending to do that while you're still employed, set up your ABN and get started, get that structure in place so it's sitting there ready to roll, and then do the side business, get started on some what are they, extra income on some way before you get
side hustle
into it. Yeah, get your side hustle happening. Hustle away.
Awesome. So I want to tell you a really great story, and it's a bit along these lines. My brother has some challenges, and I won't go into it too much because he might listen to this episode. And but he was a dairy farmer, and during the drought, he had to send his cows to the abattoirs. So for a farmer, their herd is like a massive investment, and they all had to go to the abattoirs because they couldn't afford to feed them. And since that happened, which is like a lot of years, he has never been able to get a job. I've never seen anyone be so persistent and not be able to get that steady income. And anyhow, he did sell the farm, and he had some money, and he's bought bits of land and done a reno and made quite a decent amount of money, which amazes me because he does not follow the rules, which I, have heart attacks about. But he recently decided to buy a whole block of units, and he didn't have the money to buy it. And he'd never got a loan before, but he said, nobody will ever give me a loan. But he went to this broker who got him a low docs loan or no docs loan he paid 14% for it, but he borrowed enough to be able to buy this block of units. So it's in country New South Wales. It's in a great town, but not a very big one. And so he paid $900,000 for it. And when it's fully tenanted at $250 a week for 2-bedroom units, he's got 8 2-bedroom units, the income from that property is $100,000 per year. And so since he's bought it, he's been selling off some bits of land and stuff that he's got to get rid of the debt. But that just shows determination. He just went for it, and my heart was in my mouth thinking you really should sell your other stuff first and all that sort of stuff. But he didn't. And so now he's actually solved that problem. He now has an income which will give him serviceability that he'll be able to go and do more. So
get that loan refinanced to a different lender. So that's perfect. The opportunity you should take,
Yeah, well, he was going to pay it all off, and I said, don't do that. Leave some money in it, because it's going to be, until you've got those figures up, the year, it's going to be hard for you to get a loan. So get a small loan, try for a small loan with a traditional package, not the no docs. And yes, I think that's what he's going to do, because the thing is, often you see people pay off, particularly people paying off debt, and then they can't borrow.
Yeah.
Madness.
Yeah, absolutely. You're far better off sometimes just plonking it all into your offset account. Offset people. It's God's gift to renovators. To many. As long as you can manage your money, You know, if you're really poor at managing your money,
Yeah.
okay, you know,
Yeah.
but, you know, be a little prudent about it. But
Yeah.
that's where we've got to start. So we've now got tools and things available for people to help actually just dragging it all information in from all your savings accounts and others and telling you exactly what you're doing.
Yeah.
So,
Yeah. And that is important. You can't really have mastery over your income until you have mastery over how you spend it. So
Totally.
very, very important.
Very good quote that, Bernadette. Well done.
Oh, thank you. I hope my team are listening so they pluck it out and do something amazing with it on social media.
That was definitely worth it. That was good.
So there's another couple of ways that you can get smaller amounts of money. What's the deal with personal loans?
Yeah, often if you've got a heartbeat, you can get a personal loan, but often you still have to service, but it's a lot easier to service. The problem for us is people go and get a car loan or a personal loan and then come and get the house. And they go, oh, but it was really easy for me to get the other loan. Go, yes, it was, but now it's a lot harder for us to get you a home loan. So what we want you to do is get an assessment done first before you do anything rash. So, but we have definitely had people get a deposit out of a personal loan and then been able to buy a house. So
awesome.
Yep. And post-divorce, this has been a big problem for people, not enough cash to, you know, get into the property. So we can actually help you manage to get a personal loan. If you've got an income, it helps, you know.
Yeah. Yeah. Awesome.
And then go ahead and then you're in the property and you can manage and keep going. Yeah.
Absolutely. And the other thing that we often forget is the credit card. Now, once again, we need that proviso that you need to be able to manage it. But if you sort of research the best credit card in terms of reward points as well and use that for your project, and the flip side of that is a balance transfer.
Yeah.
But you do need...
But can I just say to you, if you're doing balance transfers, mainstream lenders are less keen because it shows you're not managing your money.
But if you're using it as a tool to pay,
it's a means to an end, and then
pay your project, yeah,
then that's fine.
Yeah. So, there's a few different ways.
Just one thing on that, on the credit card thing, I'd love to bring up about Amex, American Express have a charge card, and charge cards you have to pay in full each month. Which whatever you use, you get great points from them, but they're not counted in servicing because you have to clear them.
Really?
Yeah. So often we can put through a charge card. The bank recognises that they've got them, but they don't count them against you. So you can have quite a large limit as long as you're funding it properly.
Yeah.
And using it. So you get your points, you can keep going, but as long as you've got to clear it in full. But it's a great tool. Whereas credit cards, they count, you know, for every 1,000 you lose, you know.
That's a great tip, Louise. Great tip. I love American Express. I love paying that fee because usually you get at least one flight a year for your fee, sometimes more. And the points, like seriously, we have not bought a flight other than overseas flights. We've not bought a domestic flight for years because they accrue.
Yeah. And if you're using it all the time and you manage it, if you can manage your spending and you're clearing it, no problem.
Yeah.
They can be really useful. The My Charge card gives you, a core membership. So you get a free night at a hotel. You get cheap dinners at different restaurants around Australia. So say you spent $300 or $400 a meal, they'll give you back a couple of $100 on the meal. I don't know how this happened. Yeah.
Wow.
And
who's that with?
It's American Express, a charge card.
Yeah. I love American Express. I don't love to deal with them, but I love them because they ring you up and want to have a big long chat. Drives me crazy.
I haven't noticed that. They don't call me. They just know I'm on there and doing it all. And the other thing you can get from them is we get discounted flights, and you can actually book through them as well. So that's been really useful. They've helped me with things like that. And you get, so there's lots of possibilities. But anyway.
Yeah. So like American Express, I think is brilliant for people in business because you can put, like Bunnings take it, you can put your business through it. And that keeps you in the air, which I absolutely love. So, well, should see if I can get them onto the podcast. That would be very cool.
Well, since you said they love talking to you, I'm sure you're right.
Yeah.
You should.
So there's something I wanted to finish with before we close, and this is top of mind because we've just launched the She Renovates YouTube channel, and
Woo!
I did it, yes, and I did this last week. I talked about finance, and it's really important to talk about the difference between working with a broker and working with the bank, because working with the bank, basically when you go to a bank, the bank's going to hate me. You only have access to their products. You only have access to their lending appetite. So we know, I always say banks are like toddlers. This week they eat broccoli, next week they don't. So, they might have, be favouring investors, 1 month, and then they're favouring businesses. So if your type of loan doesn't fit into their profile, then you're in trouble. And also, I used to get really annoyed because their staff would change so much. So you'd be working with someone that you really liked, and then all of a sudden they've gone and there's someone else there. The thing is, when you're flipping, unless you can structure your finance in a way that you don't have to work with a bank, in a flip, you usually do, because the commission structure for a broker is challenging. Would that be correct?
Well, we ask you to pay us to do.
Oh, you do now, do you? Because
absolutely.
Okay, great.
Because many of your clients would ring us and say, well, we just want to deal with you. And I said, well, if I'm not getting paid, I can't. So we'll just charge you. And they go, fine, charge us, it's the cost of doing business. So, So we tell them, this is what a loan
now I'm going to tell you why you would pay to work with a broker. So
thanks,
when you go to a broker, pardon?
I said, thanks, Bernadette. I love this.
Because I think, I was in a taxi the other day, and the taxi was telling me about all his woes about his borrowing. And I said, who are you working with? And he said, I'm working with the bank. And I said, and I told him what I'm about to tell you, and I'm sure you know it, of course. When you go to a broker, so that broker has access to lots of different lending institutions. Some brokers, how many have you got access to, Louise?
Over 40.
Okay.
40 different lenders.
So 40 lending institutions and all their products. So rather than one with the products of one bank, Louise has got 40. Okay. So what the broker will do will work with you to structure your application so it makes you look like a glowing client as much as they can, given your circumstances, your credit rating and so on. And they will only put that application to an institution that's likely to favour your application. So, it's unlikely that you will get a knockback because they will have tested that and made sure that you're going to the right institution for the right product for your circumstances. The other thing that a broker will do is review your product over time. So how often do you do your reviews, Louise?
Every 6 months, we review your loans and interest rates and valuations, because valuations can affect your interest rate. So if your valuation was, lower last time and you borrowed it over 80% per se, you're paying a higher interest rate, which you might even not be aware of. So if we can get the valuation down, we can get your interest rate down as well.
Yeah.
So we do.
And and that's really important because a bank won't do that. In fact, and the reason I know that is because our oldest daughter, Hannah, worked in a bank, and she was actually chastised for offering the client a product that gave them a better deal. They'd been on an old, outdated product paying too much interest, and she was told off because she offered them something that would be better for them. So it's in the bank's interest to keep you on the products that are extracting as much money as you're willing, you can pay, and yet a broker actually works in your favour. So it's like having a personal finance guardian. Is there anything else that people need to know?
A couple of things on that. We call it the lazy tax, not being checking your rates when you're with the lender. So we do that for you. So don't pay a lazy tax. Come and get it checked by someone else. And a couple of other things. Brokers, people might not be aware, have a legal best interests duty. So we are legally obliged to find the right product in your best interest, which banks do not have. So they don't have to care whether it's the right product for you or not. but we
See,
do.
that really amazes me. Like they get away, that time when I'm sure their financial advisors still do this, where they'd advise you what was going to make them the most money, not what was best for you.
Yeah. And the other thing is we much more protective of your credit file, because we can actually do an assessment on your credit file without touching it. So it's a soft touch behind the scenes. Whereas if you apply at a bank and then you fail there and you have to go apply somewhere else, that's 2 hits on your file. So, or 3, and I find people have often done that and then they can't borrow, because they would have been perfectly entitled to a really great rate if we had got to the right lender the first time, not 3 times later, and they've come to me after they've done all this damage to themselves, and then we have to sort them out and clean them up. So, and the other thing I wanted to let people know about Airbnb income, we had some clients come to us recently who had been with one lender and their broker only used one lender, which is just ridiculous. And because they'd previously worked at that bank. So watch for that, because we're taking them to another lender that accepts 90% of Airbnb income, is much more generous, and they can borrow. And here we're just told, oh no, you can borrow less. That's all there is. And we go, well, no, actually, you can probably get another couple of $100,000 over here. So why wouldn't we go there? Plus, they get their investment loans on interest only and all sorts of things that really suited them, instead of it being a negative experience. So it's worth doing the walk around and letting someone have a good, thorough look at you and see what we can help with.
Yeah, awesome. Well, listen, I think we've covered that topic fairly well. So if anyone that is listening and has that concern around being too close to retirement and people are telling them that they can't get money, if you want to make contact with Louise, either I'll put the details in the show notes, but you can also just make a comment. If you're watching this through Facebook, just comment in the comments below and tag her. And is that okay, Louise?
Absolutely, we'd be lovely.
Yeah.
The girls will get on to you straight away. They're much better than me at Facebook. So the rest of the team, I've got 4 brokers and 6 offshore teams. So we're all set and keen to help.
Yeah. And so if you are a woman who is interested in renovating as a way to replace your day job, renovate your way out of your mortgage, prepare for retirement, we are kicking off a new program on the 23rd of April. And if you would like to know about that, this program's being delivered live, as in on Zoom meetings once a month. If you would like to know about that, we're running webinars once a fortnight to I guess, explain what it's about. So if you just, comment below, you want to know more, do that and we'll direct you to the webinar. If you're further along from that and you want to have a chat, then we can do that as well. So our mission is to get women in control of their homes and their money and live particularly a retirement that is comfortable, inspiring, creative, and it's not, I guess, a life of poverty, which is what many women are looking into if they don't get this under control.
Totally right.
So,
well done.
Thanks for helping me, Louise. And if you're watching and you have a question that you'd like us to answer in the podcast, please let us know and we will do a live session like this, which I think is fun.
Yay!
So
it's fun. Thanks, Bernadette. Have a great week, everyone.
You too. Bye, everyone.
This is the She Renovates podcast. To discover how to harness the power of renovating, check out theschoolofrenovating.com.